Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Alright, guys. Well, today is a Wednesday. Tomorrow we got a holiday. And this might be kind of a bit of a front-loaded session. So, let's see what we get here. Let's come over to the charts right away. So, we've got ISM is kind of the big one that we get today. Well, okay, so I said it was front-loaded, but ISM is at 10 o'clock, so there's that. But we had ADP employment change. I haven't looked at those numbers yet, but we'll go and take a look in a bit. You can see the Treasury, not a whole lot of movement since yesterday. Okay. Here's the S&P 500. They had a good run, but it is kind of turning back over, and that is just like crossing across the range. Oil had a pretty good run, but it's pulling back now today. Gold and silver actually maybe jumping up a little bit. That's a little bit encouraging for them. I would say there was a bank out there that was suggesting that the Federal Reserve could cut rates in July. That there could be a surprise July cut. Maybe that's why gold and silver are moving, but I don't know why the treasuries wouldn't be buying as well. Kappa doing a little bit better. Japanese yen, though, still very, very, very sad. I'm kind of thinking, if I was a Japanese and I'm going to intervene, would I do it just before the holiday? Nah, right? So if they're going to intervene, it's probably going to be next week. I do kind of think that they're going to intervene, though. Don't they kind of have to at some point? This downtrend is just so nasty. And then there's Bitcoin. Well, they had a bounce after that, that selling from governments and Mt. Gox and all that sort of stuff. But now sinking back down. Now, this is one, Zero Hedge, I think, is like totally off kilter on this. It was, there was a government that had seized an illegal streaming website and sold all of the Bitcoin that illegal streaming website had. Mt. Gox hasn't sold yet. So, Zero Hedge keeps saying, oh, it's because people are concerned about Mt. Gox. No, I think they're wrong. I think that flow is yet to come, and when Mt. Gox sells, it'll probably be a pretty massive sell. So I don't know if I want to be in Bitcoin right now, but they are getting to, like on a valuation perspective, it's better. So there's that. Okay, so we have initial jobless claims coming up here in a second, but the ADP employment change was a little bit cooler than expected. They were expecting 165, they got 150, and that is less than the previous reading of 152. So I don't know, kind of interesting. We got about 30 seconds here. Okay, so there's a little bit of a move. We're getting 238 versus an expected 235. And the U.S. trade balance was 75.1 billion versus 76.5 billion. I think that the market may be reacting more to that trade balance than anything, because the dollar is definitely moving here. The dollar's definitely moving here, but I don't see anything super important. We'll see if the dollar starts to make a move, then we could get something. Otherwise, I think that we may just range here until we get the ISM PMI numbers. Kamala Harris delegate says they will blow up the Democrat Party if a white man is chosen over her. Dude. This who replaces Joe Biden thing is like really quickly turning into a big mess. By the way, I should note that the flows going into this move were long, and you know that was a jump up as well, so maybe good for longs. Let's take some notes here real quick. Okay. Holiday tomorrow. So we're already seeing some flows long. I think that we may see some persisting in it long. Why are we free falling today? Well, we're not free falling. I don't see that. I mean, the S&P 500 is giving back some of its gains from yesterday, but I don't really see anything unusual. Nah, I wouldn't call that a free fall. That's like just like 10 points back. I am seeing things that suggest the economy is weakening. I have to say, you know, this is the warning that I always give. I say this so often, and it's like one of those things that's like only actually going to be relevant once, right? But when a recession happens, it can happen very, very quickly. Just all of a sudden, everybody's expectations shift, and it's like, oh, we're going into recession. Like the bank saying we could get a surprise July cut. I think it's reasonable. Like, especially if it's like you cut once and then maybe you wait a little while to see what happens from it. Because it might be something like you cut and then you have to wait a really, really long time for all of that, you know, the exuberance over the cutting to kind of peter out. And then you cut again, and like the cutting could be really, really slow. If you don't get a recession, then the cutting could be really, really slow. But we are seeing enough weakening economic data right now to suggest that that the cut is correct, and that like the projections where we were gonna, you know, cut 2 times and everything were all completely correct, and if not a little bit late. And that is translating over into action in the S&P 500 somewhat. Like they keep trudging along in the S&P 500. But it's mostly being driven by one stock. The rest of the breadth is just not there. We are. I don't think that we are in a recession right now. Not even if you get into the GDP. I don't think that you're going to get a negative GDP reading this quarter, for instance. I think that you're seeing growth weaken. I think that growth could slow down very close to zero, but I don't think that you're going to get negative GDP growth. Probably not even close. They cut. I mean, if they cut, then you're not even going to get close to that, right? Well, so if you're with a freight company, then you're probably seeing these things that we're seeing in the numbers, which is that the growth is all pretty much slowing down to a halt. I'm not seeing negative growth, and I think you're going to see it in the PMIs again today. The services PMIs are going to be weaker than anticipated. Well, I guess I should actually look at what they're anticipating. ISM services PMI, they're looking for a reading of 52.6 versus previous reading of 53.8. With prices paid 56.7 versus a 58. And I think that both of those numbers could be much closer to 50. That's just kind of what the numbers have been as of late. Well, I got to keep in mind that some of what we're seeing here is just retracements of some earlier action. So how do I change? Oh, the font. No. Interesting. Is it the same color as the line? It is. I don't know the best way to do these news lines. I would really like to have them. But maybe I don't need to have the actual news event listed. Maybe I can just make it like if you mouse over it or something. That's a good idea, actually. I've been saying a recession was coming for a long time too. Was called an idiot for too. Well, even a blind mouse finds a cookie every once in a while, right? And I don't think that you can be saying, oh, there's going to be a recession for like 2 to 5 years, and then you finally do get a recession and be like, oh, I was right. Well, no, you weren't, because the timing of it is very, very important too. And if you lose out on multiple years of gains because you think that there's a recession coming and it never comes, then that kind of matters a heck of a lot more than when you do finally predict it correctly, right? But I don't think that anybody thinks a recession is coming. They think that we can normalize interest. I mean, you got to understand that the interest rate that we have right now is very tight. It's a really tight money supply for the economy that we have. It's having an extremely negative impact, particularly on middle class people who want to buy homes and they can't buy home because the interest rates are so high. The actually inventory numbers in the housing market have come back. We have high inventory right now, believe it or not. So we need the interest rates to come down. We need them to normalize. Interest rates coming down doesn't necessarily mean a recession, but we are seeing the slowing growth. That is a sign that if you don't normalize the interest rates, you will go into a recession. But they're going to normalize the interest rates. So I don't think that you fall into a recession necessarily. But if it does, it is a possibility, and that possibility can like shift really, really quickly. It's just like all of a sudden 1 month, everybody realizes we're going into a recession. It happens really fast. And, that all of a sudden everybody was looking August, September, and now some people are starting to look July. That's a little concerning, right? Another thing that I think factors in here is that what's going on in politics will affect mood and will affect consumer sentiments, and that is kind of like a leading predictive indicator of things as well. I think that you're going to see optimism among Democrats just absolutely plummet, right? I mean, this whole thing, it's kind of hard to judge what people are really thinking just based off of what you read online, because most of the, well, not most, but like especially on Reddit, a lot of the discourse that you're seeing are from kids, right? They're people that are in high school or in their 20s and don't necessarily know what's going on. There's a lot of like hyperventilating over there and claims that are completely untrue, like the immunity, as we discussed yesterday. The Supreme Court decision on presidential immunity does not mean that the president is free to go and assassinate his political opponents. That ruling does not say that at all. But yeah, it is going to weigh on sentiment, I think. And like, it may just only be getting started. So like we were just talking there, Uzi was saying, oh God. There are some people saying, like, if Kamala Harris, who is kind of the next in line because she's the vice president right now, doesn't get the nomination, they'll blow the party up. There are some people that will try and throw a fit over that. But I'm seeing other machinations going on as well. So the first one is for Kamala Harris, because Kamala, since she was on the ticket already, can continue to use their fundraising. And that is apparently a big problem, is that if Joe Biden drops out, they won't be able to use all of the money that he raised. They're going to Captain Planet this thing and slap Harris and Buttigieg together for a massive identity politics play at the White Women's. Well, so I kind of wonder about Buttigieg though, because he is not that, they gave him like what do they call it? They gave him an easy job, transportation secretary. And he's been like screwing it up at every turn. I don't know if they actually want him to be in there. But the other machination that I've been seeing going on is that the Democrat governors have been having conference calls together. And now like a bunch of them are going down to DC to have meetings. So I suspect that however this ends up going, that the Democrat governors may end up playing a critical role in this. And although I don't know if this would mean that you would get Newsom, but you might see one of the Democrat governors make a play. Might see it. Democrat governor try and make a play for the presidency. I don't know if it matters. Like, I don't think that the Democrats can win at this point, but the subject was sentiment, right? So if you get a really wild convention fight and a large swath of Democrat voters are unhappy with the end result of all of that, that again is going to weigh on sentiment, right? So I don't like that like 4-tick drop that we just had in the treasuries. And I am seeing the volume, which was before quite solidly long across all of the instruments. I'd say it's still decently long in the 5-year, but the other two have kind of shifted around and are now turning into a mixed market. Maybe that just means though that like the flows along have kind of subsided and we might, just kind of go sideways. I don't see any clear liquidity hole yet, so they're probably still free to move around, which means that like, a few ticks higher could still be a possibility. And we got rates sitting right at 4.4, by the way. There's actually been a decent amount of interest rate volatility the past week, hasn't there? Oh my gosh. You know what's something that I think is just like endlessly funny? Oh, I'm almost hesitant to like use the words, but the whole Epstein thing, like the liberals think that it was Trump, and the conservatives think that it was some liberal people, and is just so funny how political of a thing it's become. Yeah, it still looks pretty healthy here. The liquidity looks pretty healthy. I think when you see that, you gotta be a little careful because market makers can kind of play some games on you. But there has been an imbalance long, so I don't think that me taking 4.4 would be a terrible idea. And I do think, jobless claims were cool. I expect PMIs to be cool. Gold and silver breaking out, that's a long thing. Surprise cut July, that's a long thing. Holiday tomorrow, that's like the only thing really holding me back from taking a trade. Otherwise, I think I probably would be taking advantage of like one of these pullbacks to go long. More American tourists head to Japan as battered yen beckons. I kind of want to go to Japan. Yeah, sounds like fun. Tokyo is the best? You say so. I don't know. Like when you say the best, I'm kind of like, well, there's a lot of places in the world, man. but you know, if it's cheap, because travel has just gotten so insanely expensive. You know, when I was a kid, it was typical to go on a trip to Europe, and now that's like insane. That's like, you know, who's going to spend 20% of their yearly salary to go on a trip? Right? Like even the upper middle class people are kind of like, we'll stay home. You know, I'm a little quiet today, and I just I'm wondering if it's just there's not a whole lot to say today, or if I'm a little burnt out. Yesterday, I spent all day digging through code trying to find a potential memory leak, and I think I was a little burnt out after that because I was just not feeling a little, you know, I was just feeling a little meh. Not my normal endlessly optimistic self, and I kind of am feeling it still here this morning, even after, because usually in the morning and when I'm on my medication and stuff, that really gives a boost. But if not, I guess what I need is I need to take a trade, and that will really get the chemicals going, right? Well, they did make a new high there by one tick at 20. I might have been able to have taken 404. I should have done it just because it looks, you know, 404. How can you pass up a price like that? Well, it's too late now, I guess. Sim account into a long NES and just let her run. It's not a terrible idea, to be honest. Not a terrible idea. Like, they do seem to be building a little base here, and you know, you can never how do I put this, you know, ES tends to go long, so okay. They're kind of stepping up, but they're just being a little shy about it. It doesn't look like there's anything stopping them, though. And there is a decent amount of flow coming in long there as well. Kathy Wood's ARK Invest sells Tesla shares worth 14.5 million amid rally driven by Q2 delivery numbers. Oh, okay, so now Tesla can rally. That's funny. Oh man, that's what I need to get the dopamine flowing is to just read Kathy Wood hate porn about how big of an idiot Kathy Wood is. No stupid questions. How did Hawk Tuah get so popular? That's a good question, my friends. It's a good question. I get it. It was a funny, unexpected response to a question, but how did it blow up like that? It's not nearly as funny or life-changing as it's being pushed. I even get ads for t-shirts now. I know, right? You know what like is so weird to me is it just feels to me like Gen Z will get excited about the stupidest stuff. Like, I've been on the internet for a long time. I've seen a lot of funny things on the internet, and so far I've been a little bit disappointed in Gen Z memes. You know? Like, Hawk Tuah, that's the best you got? Really? Okay. Okay. You're never gonna beat, never gonna give you up, right? So a lot of corporations would love the answer to this because they love astroturfed marketing, but really it is all random. Yeah, it's sexual in nature. She has a charm to her and she is good looking, but there are hundreds of memes that still have those things and never go viral. Maybe that's the answer. Oh, really? Are they really? Oh, well, hold on. Something's going on here I don't understand. So at one point, I maybe could have gotten 404, right? That was when we pulled back like 4 ticks. Now I'm looking at it, and they're below 4.4 now. So that's almost a swing of a basis point. It seems like the micros are a little sensitive right now. And I don't really see any good reason to. The yield curve is pretty flat right now. Or when I say flat, I mean like it's not moving. The yield curve isn't moving very much. The Japanese yen, and just kind of looks nonchalant. Gold is pulling back here. S&P 500 isn't doing anything. We are seeing a little bit of a rally in oil. Okay, so I'm not seeing a ton of movement in other instruments yet. By the way, biggest winner today, silver. So gold and silver did have a pretty good run here. But that was from overnight. In the past like 30 minutes, not a whole lot happening. And the treasuries are so far just ranging in this area. I think that the micros are just a little sensitive. I think that you got to be a little bit careful about that, because that might be the market makers trying to bait us into stuff. Well, yeah, sure. Like, look at that. We're already back up to 404. I don't like that. I don't like that. That is so a little bit more volatile of a market than is justified by the current conditions in a little bit of an uncertain area. Kinda rubbing me the wrong way, you know? Oh, Octavius, you shouldn't have said anything. It was like as soon as you said that, it downticked. They've been like, well, Seth doesn't take enough trades. We can't trade against him, so maybe we can do it to Octavius. Oh, I hope not. I do often feel like the market's fighting me, though. I definitely do. And then I'll start to lose it. I'll make a decision that's like super, super bad, right? And then they're like, let's cut him some slack. Like, let's give him every chance to get out of this awful trade that we know he's taken before we start executing the meta order, right? And then and that's the time when I'm really, really stubborn and I take a big loss. Because so much of the internet is just people repeating the same crappy memes over and over. So when someone says something relatively funny and original and add in the fact that it's sexual and she's attractive, it becomes popular. And the Chick-fil-A girl going viral for pulling some funny faces in the space of a few months proves that people just really need to get out more. I think they'd love it if this kind of stuff that's seen as a novelty goes viral these days. My theory is that TikTok specifically pushed it. There's somebody over at TikTok that they have a little button that says, make this thing go viral. And they watched it and they're like, this is so hilarious. Make this go viral. And that's what happened. I think that's the way that it works for that. I think that these social media companies have a bigger impact on what blows up and what doesn't than people. Right? I think if I was like a dyed-in-the-wool, die-hard liberal, there'd be somebody over at YouTube that would be like, oh, we need this guy to go viral. This is super, yeah. And I'd go viral. I think that's how it works. Convince me otherwise. Convince me I'm wrong. Show me I'm wrong. You can't know that I'm wrong, right? Like, they hide it all from you, so I might be totally right. And I might be totally wrong, but you'd never be able to prove it, right? Because YouTube hides that information. I think it should be a law. Like, if the social media platform is either pushing or holding back a particular video based on the algorithm, that when people see the video, that information should be shown to them. This video has been boosted by YouTube, or this video has been throttled by YouTube. I think that there should be transparency in this, you know? Yeah, just started the stream with I love Democrats. Guys, I know it's super, super rough. Let's try it. Let's see how well I can do. Guys, I know that like it's super rough with Joe Biden dropping out and everything, but really, this is a good thing, okay? We can get a good super liberal candidate in there, and we have tons of really good people to pick from, and they will totally beat Donald Trump. Totally. So no need to panic about it. Let's just see what happens. It'll be fun. A brokered convention, it should be fun to watch. I don't know if it's hitting. I don't know if I could be a very good liberal, guys. Do I need to be? I need to be more unhinged about something, don't I? I need to be like, I just can't believe. I can't even do it. We need to no. I'm not gonna do it. I can't do it. I was gonna go into the whole oh, what does this immunity thing allow people to do? Because that's what all the lefties that I've seen doing, but I just can't get myself to say something so stupid. You need a wig and master your Bob Ross voice. And we need a whole video of Bob Ross trading. You know, every once in a while I'll get somebody in here that's like, you know, you have a really good voice for this. And I'm like, oh, I don't think so. Listen, everybody sounds pretty good with the right microphone. It's true. The right microphone and enough practice. Because I tell you what, when you talk, hearing yourself all the time makes a difference in how you talk. I mean, it used to be, you know, hearing yourself, people don't like to hear themselves. But having done this for like 8 years, I really like listening to myself. But I have to be careful about like watching past streams because like I will just keep watching and be like, oh, I don't remember. Okay, I remember that. Like, I just enjoy watching it. It's kind of weird. You would think, oh, like, are you self-centered or something? But I really think it's just like once you get used to your voice, and past that kind of, oh, I don't know how to put it. It's just like I think that people get jolted by this is how other people see me, and they're really self-conscious about it. But once you get past that and you don't really care about how people look at you, it's really fun to just see what were you doing at that time and remember it all happening. You got the narrator thing going. Yeah. You know, I don't talk. I used to be that I would give like the play-by-play in the DOM, like every little tick, but I've kind of... Hey, Octavia scratched at that. I actually think that was a pretty good trade, you know? Like, yeah, it didn't go anywhere, but we were able to play that pretty well. Because I might have been like, this isn't working, and would have taken the one, you know, -1, -2. I don't know. Well, on the split side, and this is where it kind of like, I was thinking about it the other day. I'm like, I talk about these sorts of things too much, don't I? I guess that means that it does bother me that like I feel like that I should be bigger on YouTube than I am. I don't know if that's actually true because I feel like that 15,000 subscribers is really freaking amazing, right? Like that is way further than I ever thought that we were going to get. It took me a little, you know, like I had goals to get to 15,000. It took me 6 months more than I thought it would, but it happened. And I haven't made a whole lot of videos lately either, so hey, we're doing pretty good. But I think that there is still something kind of there in the back of my head that's constantly like, well, you're not as popular as you should be. You have to explain to people why, so that they, you know, they don't go, what's with this guy is too weird, and go away, right? It's really only amazing if it turns into views, to be honest. Oh wait, I don't know if you mean like the having 15,000 subscribers is really only amazing if it turns into views. I don't know. Like if I got the right video, people do see it. If you get the right video and the right thumbnail and everything, people do see it. So I assume the growth is exponential from here. Yeah, it is. There is definitely this sort of a thing where like once you get to kind of the level that I'm at, you know, it only takes the algorithm picking up on one thing, and then all of a sudden you're in the hundreds of thousands. So, you know, it can happen really quickly. But like one of the things that I think really bothers me sometimes is I'll go in and look at, okay, so like what are other people in my space doing? Because it used to be that I was literally the only person. Now there's countless live streams about the market. And a lot of these live streams, they don't even say anything. Is just a video of a chart, and they get so many views, and I don't get that. How does that happen? Are they view botting? Is it just like luck of the draw? Or is it, you know, you say stuff, it's too controversial, so a certain number of people leave, and then, you know, that hurts you in the algorithm. You know, I just don't understand it. Yeah, well, it's like the ones that I don't know. Let's go and look. You say copy trading. I was going to say, like, I wonder if I can find an example of a stream like that right now. Like if I say day trading. I spent 18 months using Rust and I regret it. The prime time, I'm going to have to watch that video. I'm kind of the opinion right now that Rust is a really cool language, but it's not good enough at the things that we want it to do, like making desktop GUI applications, to justify using it. Anyways. Oh man, CoffeeZilla looks so young in that video from 4 years ago. Man, he's aged so much in 4 years. Anyways, filters live. Okay, so this one doesn't surprise me because it's like a group of people, right? Okay, Patrick, he's always kind of been up there at the top. Stock market half day. We could also probably assume most of the subs for you are real people versus constant bots and stuff. You know what I mean? Yeah, it's totally true. And like one of the things that is really like, this is again why I'm like, I don't know why the algorithm doesn't pick up on it more, is that my audience is like hyper engaged, right? Like if we have a dozen people watching, how many people do we have right now? We have about 16 people watching, and we've got like what, 1 2 3 4 5 6 7. So I would say that we probably have like 60% of you guys are like active, like you would say something, you know. That's really high, I think. If you know, I would normally only expect like 1% of people to even bother saying anything. So we have like a super engaged community. We'll see. Okay, this one, the guy is talking. So that one's wrong. You know, maybe it was just that one time that I saw that. Well, and now it only goes down to 32. You know what? Maybe you're right. Maybe it is viewbots. Like, okay, who's this guy? I've never heard of this guy. Gareth Solman. Are you looking for the book map and order flow channel? No, I just searched for day trading. I've never heard of this guy before. He has 150,000 subscribers. Okay. The no-shill zone. Okay, so he's probably... I see where they're going. You know, it's these ones where it's like you get 1K. I think that the one I was looking at, it was this stock market live channel. He's talking right now. So maybe I'm wrong. Maybe I'm just wrong. Well, oh, by the way, while I wasn't paying attention, they did push a little bit higher there, didn't they? They really kind of like made it look like they weren't going to do it before that happened, though, didn't they? Like, even now at 20.5, I'm a little bit like, might pull back on you. Like stock market live dude for news, but no futures there. I think people hack the system. I've seen videos where people have like 100 phones posting the same thing to multiple accounts, and it's definitely bots. Octavius is mad because it went without him, yeah. Nah, I think getting out at that spot was like reasonable, right? It was like, it's not doing anything. It's not worth being in right now. Actually, even with that move, so now that we had that move up, and now it's kind of like, oh, okay, so maybe the long flow is still there. We're still going to have a long trend. I should get in. But I have the same opinion still. It's like, I don't think a whole lot is going on here, and I got to be careful about where I'm going. There does appear to be like an overall like imbalance long, but because of the situation, I don't think that you can just buy into the highs and expect it to go higher. I think that you do need to get a good price. And even then, that was only $10, so. Cool. Actually has turned out to be more common than people expected to. Don't know what about that, but about view bots and stuff. I don't know. Could be. But you know, for me, it's kind of like, okay, if what would you pick? You talk about politics because it affects markets and we want to understand what's going on in politics, and because I enjoy it, or have 100,000 YouTube subscribers. I think I would rather talk about politics, you know. Like, it's easy to underestimate people want for fame, and for such of the channels, it's the restaurant logic. It's proven people will sooner go to the filled restaurant than an empty one. Oh, well, yeah, for sure. So if you have a full channel, you're more likely to get more views on that number alone. Yeah. It's Pareto, right? It's the Pareto distribution. Like, success breeds more success. It's definitely true. Sometimes I kind of think I did things backwards. Like, I made all of those order flow videos. Well, I'm glad I made them. They were probably a major factor behind where the channel is today. Like, I don't think we would have 15,000 subscribers if it weren't for those videos, or my like Ninja Trader advanced tips and tricks video. That's another one that's really helped the channel out. And now it's like, okay, got a decent audience. What are the things that we're gonna put out? You know, I think I should have done it. You should have done it the other way. Because right now the videos I'm looking at are like, okay, let's make a video about index funds. That's, and that is part an issue that I want to talk about, but it's also part, it seems like an issue that people are interested in, you know? And a lot of the video ideas that I have on the table are kind of more things that, like, I think that will be a popular YouTube video, and not necessarily this is the most important piece of information that I can give you to help you become a better trader, blah, 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 right? Because I've made most of those videos already. So, like, I'm kind of like, I should have done it the other way. I should have made all of the cheesy, how much money do you need to day trade kind of videos that get people to click and get subscribers, and then giving you guys all of the good advanced information, right? But you know what? It happens that way for a lot of people. Like I forget his first name, Boyle. The guy that's got like a lot of stuff about how different funds work and stuff like that. He started on his channel like making the videos about like, here's how this strategy works and here's how this, and like the really detailed ones, and like nobody watches those videos. And then he started making the videos that were like, here's this thing that happened in the past, and he tells the story about it. And that's where his channel started to get really big. If you keep putting them out, you'll get more subs for sure. YouTube biases recent video. Yeah. I like one of the big things is that if I was putting a video out every week, Or let's say that I was just consistent enough that I pulled out a video every month. For the whole time that I've had the YouTube channel, probably would be having more of the success that I expect. I don't think that I can go like, 3 months without posting a video and expect YouTube to like super reward me for it, right? But I just only have so much energy right now and time to be able to make videos. And videos are a lot of work. They really are. Even just recapping the trades you take would be good. Yeah. You know what, Morgan? I would, one of the things that if I had the time, I would really like to do is make a weekly recap. I know that Matt, Trades by Matt, he basically, he doesn't keep his live streams listed anymore. And instead he has a video editor just make a recap of the session instead. And which I hate, by the way. I kind of feel like that he's hiding what's really going on. But I think that a weekly recap could be really valuable to people. Take all of the little, like, each of the economic numbers that we had and big moves that we had and important discussions and turn it into a 5 to 10 minute video. I think that would be great, because the truth is that somebody will come in here and ask just the right question, and you get really good content out of me, and it's just in that live stream, and it would be good content for the rest of YouTube. So, yeah, I believe if you are this obsessed with other channels doing better in terms of views, then you should go ahead and already try doing some of the stuff that they are doing. Well, yeah. But like that's the weird dichotomy about it, right? Is that part of me doesn't care and part of me does. And the part of me that, well, and I guess the issue is that the things that I think other channels are doing that would give them an edge over me are things that I am not willing to do. Things that I do not feel would be honest with people, and things that I don't think would be the best for people, So I guess a part of it, and this is a large thing, like with my feelings about social media in general, is that I just very much dislike what social media ends up pushing. I feel that social media ends up pushing narratives and ideas and stuff that are objectively harmful to people. And the content that would be beneficial to them and would enrich their life, like, goes nowhere. And that super bothers me, especially here in the day trading space, where it's like, we have some pretty valuable information that even if you're not going to day trade, I think could enrich your view of the world and the economy and how things work, and might change some of the decisions in how you view things. And that doesn't really get traction. But then if somebody is just outright scamming everybody and claiming these huge profits every day, and everybody goes and watches it, it's so disappointing, right? Very disappointing. But I will not go and start putting a big number on every live stream to try and get people to click, thinking that they're going to make tons of money. I will never do it. I do not feel that it is honest. Even if I was every day making $10,000, I will not put that on the thumbnail. Okay, because that is suggesting that is typical results, and that the typical person watching that live stream will get that result too. And that will never be the case, right? The majority of traders have to lose simply by the very nature of the market, the way that the market works. Will you be able to trade the FOMC minutes? Well, so I am only here until about 11 o'clock Eastern time is usually when we shut things down, because I do have a day job. And you're right that does the market close early? I didn't know that they closed early per se, but I do think the markets will be open during the FOMC minutes. Let's check that, shall we? Let's see here. Holiday hours. Okay, equity products on July 3rd, 12:15 close. Oh, so it is an early one. That would be before the meeting minutes comes out, wouldn't it? Except for in interest rate products, you get regular hours. Oh, that's weird. So that means that you will still be able to trade the FOMC minutes in the treasuries. I don't know if there'll be anything big in it, but I will not be here. Well, that's kind of weird. And then, yeah, tomorrow. We won't be here tomorrow. I don't know what we're going to do because I don't have the big kids. And I don't think that we're allowed to do fireworks on my street this year. Like, they moved the line down, which kind of sucks, but... So if I'm going to do fireworks, I have to go somewhere else. Now, you know what I'm going to do is I'm going to take my binoculars and I'm going to go somewhere in a good spot and just chill. Yep. I'm still obsessed with binoculars. For some reason. It's one of those things that, like, when I'm bored, I'm like, okay, let's pull up, look at binoculars and try to understand why some binoculars are $300 and some are $2,000. I don't know. I think one of the things that when I discuss, like, the success of a YouTube channel, blah, 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 blah. I'm also kind of beyond the, like, oh, I want to be a famous YouTuber sort of a thing. Like, sure, it would be super great if this YouTube channel blew up and I was making enough money from the YouTube channel that I could spend my free time making more content. I think that would be nice. But making content is hard. I mean, making content is hard. And I don't think that I would enjoy just only doing that. Trade in the morning and then the rest of the day I'm just making content. I think that would kind of grind on me real quickly. Right? And, I really don't think it's like I need the money. I'm doing pretty good without it. So part of this is also just me going back through my mind and kind of accepting that, like, we're really happy with where we are and we don't really need it to be. Like, this exponential growth sort of a thing doesn't interest me as much anymore. Because the more that the YouTube channel, the more successful it is, that's just more demand on me, I guess you could say, right? And these days, I'm way more interested in ways in which I can either provide my experience, leadership qualities, and bringing new things to the market. Seems to be more interesting to me right now. So, like, the thing that I think is the most interesting to me is if we were able to build a hedge fund where everybody that has passed the test would invest in the fund, or private equity and invest in the fund. That would be interesting to me. Or just starting a bigger business. Like, I can consider the YouTube channel a business. I could put more into like selling the indicators. Slowly over time, build more and more sophisticated indicators that fulfill needs that people have. Because right now they're really like, these are my indicators that I use and things that I think you need to have and would be useful, but aren't necessarily like what people are looking for. I could, try and fill, and then enough to where you have developers and stuff like that, right? Hire physicists for your fund. Yeah, I would like to have, a fund with, and then I could get real quants that kind of know the math better than me. And yeah, that would be super interesting. Anyways, I could do that with the, but it's kind of all bootstrapped, and it's a long road. I would love to make my own platform. I think that I could make a really good platform, like feature wise. I'm kind of like on the tech side, like what's the best thing to make it in and everything. I'm still a little bit like, I don't know if like the perfect thing exists for it yet. Man, S&P 500 is really taking off that first minute. Look at that. Jeez. Anyways, so I could turn that into more of a business, but then I kind of think, well, yeah, but maybe I should do something that is more of a business like that from the start. Something that you don't bootstrap, something that you go and you take a small business loan with and stuff like that, or like you go and you buy a business. So I will go on biz buy sell frequently. And the other day I came across one that was a GLP-1 online business that sounded like that they were pulling pretty decent amount of sales. I was like, okay, like, yeah, you go to the bank, you get the loan. Maybe I combine with my dad and my brother to get a better chance of getting the loan and everything, and then you take over that business, an existing business that's already bringing money in, and learn those skills. Because I guess the thing is that I'm kind of seeing where like millennials don't have a whole lot of experience in these sorts of things, and the boomers are retiring. They need to offload their businesses onto somebody else, and they don't have an exit strategy. Like somebody needs to buy the business from them, but who's gonna buy it? And then if the person buys it, will they actually be able to run the business? There's not enough people like that. And I'm kind of looking at myself and I'm like, well, it seems a little egotistical to think, oh, I should be the big boss guy, sort of a thing, right? That doesn't necessarily appeal to me. But then I look at it like, but who's going to do it? Because I don't see people doing it. And it seems to me like it's something that's like really specific. You have to develop skills for and things like that. And that like I'm in a position to do it. So if I'm in a position to do it, then there's some obligation to try, So I've kind of shifted more that way instead of like put all of the effort into the YouTube channel. But there's another part of me that's like, yes, but with the way that the family life goes right now and the amount of energy that the kids take and all of that, I'm probably not in the best spot to do a business like that. So I guess for the time being, we're going to make these indicators better and better. And I was looking yesterday because one of the things I was saying was like, hey, we should do an affiliate program. We'll up the price to 150. And then if you bring somebody else in, you have an affiliate sell, I'll pay you $50. Right. And I had problems like finding a good system to be able to do that with and everything, but I found one yesterday. I don't know why it didn't turn up in my searches before, but I found one yesterday that I think we could do. So you'd be able to go into this website and sign up to be an affiliate, and then if you refer people, you'd make $50. per person. Because I don't know if I'm super great at the marketing, right? Probably there's somebody listening to me that would be better at the marketing. We'll let you guys do it. So I think I am going to do that. I have to look at it a little bit more, but I think I am going to do it. And that should be fun. I think that there is some room to make the indicators better. I guess the big thing I got to do right now is this kind of like this news thing. I need to clean up this thing that draws the line. I need to clean up the thing that draws the line and writes text on it so that it doesn't cover up the whole chart. And I need to change the names of things so that they're not super long. By the way, we do get S&P PMIs here in 10 minutes. Interestingly enough, my thing doesn't have that one listed. But then we have the ISM services. Right. See, this shouldn't say ISM services index. It should say ISM PMI. And that would be like a lot shorter. And then it wouldn't be so distracting on the chart. That random ES. Oh yeah, I forgot about talking about taking a random ES long. I don't know what was with that huge jump on the open. Was like Nvidia running or something? There must have been some stock that, had done something and was gapping on the open. Now, it's not Nvidia. Should we check some of the meme stocks? GameStop is trying to start something again this morning. This Chewy one looks like it's dying down real quickly. By the way, this right here, well, I don't know if I would be able to get 4, but it is kind of doing what I suspected. In fact, it's been really, really flat now. So it's like really, really flat here. They're trading this range. It's kind of difficult to get a good spot. Not worth taking a trade now if we got PMIs so close, right? Well, so it was kind of doing a little bit like, oh, maybe we will go down a few more ticks, but it's not yet. It's just sitting there and like, is anybody going to take it? But they're not. 5 minutes. I'm kind of reading around here a little bit. CBS poll has President Trump with a 3-point post-debate swing over Biden. I'm surprised it's only 3 points. Okay. Novo and Lilly fall after Biden and Sanders slam Big Pharma for unconscionably high anti-obesity drug prices. The business that I saw that was like up for sale was a GLP-1 business. I'm like, actually, that sounds like a good place to go in. Maybe I should buy that business. Well, now they're pushing that they're going to break the highs. But I'm not seeing corresponding volume up going along with that, so I'm a little hesitant on that one. Looks like there was a large iceberg that got filled in there somewhere that I missed. Well, a few contracts went into it, but there's still... I guess that's kind of the way that it's been all morning, though, right? It's like, takes them a little bit before they start nibbling at a new price. Okay. So, I'm seeing a little bit of weird, like, I'm not seeing like your normal poll, but there is a lot of activity on the DOM here for the PMIs that are coming out, S&P PMIs. So we're looking at for 55.1 is the consensus expectation, and that's in line with the previous reading of 55.1. They got 55.3, higher than forecast 55.3. You would think that would push the market down a little bit, but like they're not really reacting to it. Okay, well, there's an uptick. So I'm getting a little bit of, a little bit of volatility with it though. The dollar seems to be moving again and coming down. I'm not seeing a corresponding move in the Japanese yen though. It's like the euro has been really strong and the dollar's really weak this morning. What does this look like when I go on the larger? It is, well, it isn't almost into new territory. Got a little bit lower before they come to the last pivot. Does look like something real is happening in the dollar. You do have like pretty holiday flows in currencies, but I don't know. The growing hatred for finance influencers. That's interesting. This person thinks it's just the growing hatred for influencers, maybe. Like if there's anything that's good about, oh, okay, maybe the YouTube channel should be more successful than it is. But you know what? I'm not an influencer. Not popular enough to be an influencer, so maybe that's a good thing for me. All right, well, so that hot number should have been a sell, and they like did an uptick and then they turned back down to 20. So now we're back to the 4 which is basically where we were at before all of this, when I was like, maybe I should have taken, I could have taken a trade there, but nah, I don't really like the, well, I'm definitely not going to take a trade here 15 minutes before the ISM PMI, but I'm still kind of thinking that the ISM PMI, services PMI, might be a little weak. Because all the numbers have been coming in a little weak. Graham Stephan scammed his audience by peddling the FTX crypto. Oh, did he really? I didn't know that. I didn't remember him doing anything with FTX, but whatever. I remember at that time, I got all sorts of people trying to get me to promote certain cryptocurrency things, and I just told them all blanket no. Crypto, no. Hmm. If there is a teacher shortage, why is salary largely unresponsive? If the government pays for it. Because school budgets are set largely independent of market forces. In a private business setting, you'd see companies competing for labor up until the cost of that labor becomes unsustainable for the business given their revenues and other expenses. But in the public setting, tax rates and school budgets are governed by factors unrelated to the current market for instructors. Ding, ding, ding. Okay, well, they have recovered a little bit of it. They went all the way down to 19. They were at 4.4 for a second. Come back. 4.4 might be the best you get. I don't know. And the speed at which it's going. Well, we could take a sim trade here. Because I do think that the trade is the PMI will be weak. So let's try it. And it's because it's so tight in this area, you can probably use a decent amount of contracts. Well, I like that I got filled and they didn't trade through it at Iceberg. It's good. Biden admits he almost fell asleep during the debate? Really? My goodness. I know, that kind of sounds like something that I would do though, right? I think that the first time that I was in a debate, I would probably be like wide awake, right? But you know, maybe at some point, you know, having the bad day and I'm just not that engaged in it, and I would fall asleep for sure. Okay, so I didn't get any fills at 21, but that's okay. Oh, JP Morgan's Colin Novak fired for being too bearish. About time, to be frank with you. That guy has been dead wrong the last like 2 years. Okay, let's read. Marco Kolonovac has been bearish for 2 years. Horrible calls finally catch up with when he had lost all credibility after Zero Hedge anointed him as a market Gandalf. Why did they call him Gandalf? I don't remember that. Is this a contrarian indicator we are waiting for? JP Morgan's chief global market strategist Marco Kolonovac is planning to leave the bank, Bloomberg News reported on Wednesday, citing an internal memo it obtained. That doesn't say that he was fired. Kolonovac is perhaps famously known for his conflicting stock market calls over the past 2 years, which have differed significantly from Wall Street's actual performance. Kolonovac, who has, according to his LinkedIn profile, been at JP Morgan for over 16 years, is exploring other opportunities as per the memo quoted by Bloomberg. Kolonovak also served as JP Morgan's head of global research. The memo said Hossein Malik will now become the sole head. JP Morgan did not immediately respond to a request for comment from Seeking Alpha, and neither did Kolonovak or Malik. Kolonovak was consistently bullish on U.S. equities for much of 2022, a year in which the benchmark S&P slumped nearly 20%. The analyst turned bearish towards the end of the market bottoming out and has remained firmly so even as the S&P 500 rebounded almost 25% and advanced more than 14%. As recently as Friday, Kolonovak backed his ultra-bearish year-end target of 4,200 points for the S&P 500 even as the index has powered past 5,500 and has caused other brokerages to drive up their estimates. Yep. Because you know what the problem is? It's not that Kolonovak is like dead wrong about everything. I mean, like, he posts real information and real good information that's good to keep in mind, but he doesn't understand what actually moves markets. He you know, these analysts at Goldman, they understand a little bit better that it's orders that actually move the market, and as long as they're buying, it's going to keep going up, and it doesn't matter all these other things. And that can persist for a super, super long time. Imagine turning from bull to bear at the absolute bottom of the market and then watching as all indexes hit all-time highs. Doesn't he know that stocks only go up? Right. That is pretty funny. Is Zero Hedge going to have a story about it? They should have a story about it. Let's see here. Nope, I don't see anything. Over here, we did get an uptick at 20.5. Yeah, it looks like the low resting liquidity at 20.5. So still, I mean, it's kind of, they've kind of been there for a while, so. Okay. A little nibble. Interesting that 11K at 21 ain't pulling. No, did I say 11K? It was 1100, but still, because everything else is pulled. Well, I'm a little bit, I wanted to offload a little bit of that before the news. It looks like it doesn't gonna happen. It's a sim trade, so I'm just gonna hold it through and we'll see what happens, shall we? Should be fun. And again, on the headline number, we're looking for 52.6. I think this can be below that. Da-da-da-da. Okay. That didn't do what I expected it to. I guess I took 3 there. Well, that was weird. Okay, wait. So what was the numbers? Ooh, it was 48.8. Wow. Contraction, and prices paid. Okay. Prices paid was not quite so much. 56.3 versus 56.7. So that's still kind of a little stagflationary. But still good enough for a good pop. Geez. So you know, I had 3 contracts on there, and then when it popped, I was like, okay, I'm going to take one off, and then I'm going to take another one off, and then we can let the third one run. But then I was already out all of them, and then the other click, it took me short. So then I made 2 ticks on the short, which I did not intend, and it was just like dumb luck. But that was pretty fun. How much would I have made if I had actually taken that gamble on the micros? I could have made almost $50. Hey. Well. Now, on this one, because of the market and everything else like that, I think that there's a decent chance of pullback on this. Although that pullback to 29 might be it. I guess what I'm saying is I'm not expecting this to turn into a trend day and it's going to extend well above 10. I'm expecting this session to be pretty front loaded. So the longs are probably going to take their profits and we're going to settle in here somewhere pretty quickly. That's my expectation for the flows. We need to take better track of these numbers, like the releases, because I think I've done pretty good with that this past year.
Block by.
Like it's been a while since I took a gamble like that on Sim and was dead wrong and lost a lot. Now that one I only made, like, what was it that I made? $300 or something like that. So I don't know, for the amount that moved, maybe should have made more. How much was it? It was 20 ticks. Yeah, for that should be. If I made MFE of 19, shouldn't I have made more than $312? I don't know. Anyways. That was fun. Well, now we get a whole hour to watch it kind of chop here. See where along this they settle. I mean, there is a possibility they could keep going. If they kept going, that would, I think, be pretty significant. Like I'm expecting. Ooh, okay. That was oh, holy crap. Did you see that was a 7K block buy? I don't, that one maybe shifts me a little bit. Like that could be the market extends from here.
Block by.
Holy crap. June services PMI indicates the overall economy is contracting for the first time in 17 months. Poor Octavius. Oh, there's no way that he would still be in that. But on the split side, there was plenty of opportunity to get in again at 4.4, right? This whole thing is we all kind of assume. Do we all kind of assume? Maybe it's just me that's assumed. I've always assumed that trying to predict and guess what the economic numbers are going to be is a bit of a crapshoot. But I'm starting to think that I have a little bit of an edge with it. I think that there would be a ton of volatility and you would need a ton of money to be able to trade it. But I've been getting them right more often than wrong. So... The forecasts were lower for ISM, so you could have just bought off the forecast. I don't understand what you mean by that. Are you saying that they expected PMI to be lower than last PMI, and so... I don't know about that. I tell you what, man, there was some really big buys in there around 30. That could be the sort of thing that kind of digs a hole and causes us to rotate around 30 for a long time. But those were incredibly aggressive. Seeing such aggressive market orders in that location suggests to me that there's a real possibility I'm wrong about that the flows really quickly die out. There could be some real money that is offsides here.
Block buy.
He's still there too. Holy crap. Is it gonna go? Is it gonna pop? I'm now I have to wonder if they hit 10 if you see stops. Because this is already approaching a 30K change. So here's a thought. We've been having quite the downturn since last Friday, I would say, in the treasuries. They've been moving down quite a bit. And this has all been kind of contrary to the flows that I've been expecting. Because in many of these situations, I was expecting long flows. And that is largely in part because the economy appears to be weakening to me. So we've been trying to figure out what has been driving those flows on the short side. One theory was that the Japanese are selling. They're selling treasuries so that they can conduct currency intervention next week. Another theory is that Donald Trump is now very, very likely to become the next president, and some people are betting that Donald Trump being president will reaccelerate inflation. That some of his policies, particularly trade war stuff, would cause inflation to accelerate. There you go. Okay, so that's not the... I mean, I think you could consider that a stop run. But, you know, I said above 10. That might just be the guy with the market orders hitting into it. Okay, anyways. So, If it's the Japanese selling, then, you know, they're going to be okay with whatever the treasuries are doing. The treasuries moving up, that's going to be happy for them. Maybe they don't even have to intervene. Who knows what they do with it. Fine. If it is people placing bets that Donald Trump is going to win the election and that is going to be an inflationary force, then these PMIs being weak and getting signs that the economy is contracting is like a huge problem for your position, isn't it? You're now basically like right back to your break-evens point on those trades and possibly puking. So the flows that we are seeing long that are so incredibly aggressive and have such huge orders behind them could be a large hedge fund of some sort puking. Okay, well, they've traded almost 4,000 contracts at 10. I was going to say almost 5. I mean, it probably will be 5 before they clear it out. But there you go. Now it's 5. And they did trade 10.5, but only 4 contracts go off there. So now, this actually is surprising to me, though, because with all of that craziness, we're only down like another basis point. Should I be taking a live trade long here? I am kind of wondering. Well, I think the reason why I'm sitting on my hands right now is just because I've been kind of trying to avoid trading the aftermath of the news, but so let's give it a little bit and see if they form another spot at 10 here or if they go through it. I think that will kind of give me the last little bit of thing to note if this is like the real deal or not. Well, I don't know. That looked good to me. Good grief. So now my concern is like, how far can this go? Because this is getting pretty crazy. Where are we at on the volume profile relative to these other moves? Well, geez, look at that, man. So first of all, for the Japanese yen, like wowzer, the Japanese yen is just going wow. And the dollar, you know, the dollar had already been pre-clobbered this morning. So seeing them go further today is, But coming back to yen, because that's what I'm kind of more interested in here. Okay, so we're getting into the area from like Friday. I think if all of this downside was all part of one large meta order, I think they're underwater at this point. And they're puking. How much further would they have to puke? Who knows? This is a change. I don't know if I can take a trade now, guys, because that is a 30K change. And no. That is a 40,000K. That is a 40K change in cumulative delta up. There's no way they can keep that pace up, can they? We're already to 0.2 Good grief. That was an insane move. Like, we've seen some good moves off of PMIs, but this one is insane. Now, another side of this, stocks are up. So bad news is not bad news for stocks at this moment. Well, now I'm kind of a little bit mad about that sim trade because I think that I would still be holding the contract now. Like, it would be a $500 winner now. And it's not giving you pullbacks, right? Like, I was thinking 3, 4, 5 and are already down. Nah, what coulda, shoulda. I really kind of feel like I already missed the boat. And if I try and jump on this now, I'm taking on a lot of risk for very little reward. But to what I was saying earlier, I thought that they might die down really quickly. It has not. It has extended. That means that the market is really reading that number as significant. People are really shifting positions because of it. We could continue to see activity throughout the rest of the day. So, I don't know. The last comment I see here is from Uzi, so I'm just like going to go back to this. That, like, he was saying a lower PMI reading makes the price go up. Typically, if the forecast is lower, you bet on the forecast or against it. That's not the way that I do it. So the way that I do it is I say, what was the last piece of economic data that we got that was similar to this? And did they beat or miss the expectation, right? So last PMI and basically all of the leading indicators that we've gotten were all weaker than expected. And that's what I tend to see happen. And I think that there are some studies supporting this. That basically, like, if this is... let me draw a picture here. If this is like the reality... or like if this is people's expectations, the reality tends to be like this, where the market will beat their expectations a bunch of times in a row, they'll miss it a bunch of times in a row, and the reality ends up being more extreme than the expectations. Yeah, they were, which is why the forecasts were weaker than the previous numbers. Yeah, but I could go in and like if the expectation was higher than last, so they were expecting 52.6 versus a previous reading of 53.8. If they were expecting a 54, I still would have said that number is going to come in low, because the past numbers similar to that have come in low. And yeah. Now, a big thing to note here, though, is that number came in at 48.8. So below 50 means a contraction on a PMI reading. So that's a big part of why the market is reacting so strongly to this. Yeah, silver looks good on pretty much every time frame. Well, I don't know about every time frame. Right? What I see in silver, what you're probably seeing in silver rather, is momentum reigniting, right? I don't have the moving averages on here, but I'm a bet that the moving averages are in a place now where people might be taking momentum longs. Let's see. Your point is, if you wanted to play the news, they're expecting a lower number. Bet on it ahead of time when the risk is lowest, and either you're right and you're up a bunch of ticks, or you're wrong and your risk is limited. Well, wait, how is your risk limited? Because, like, what if this number had come out and it had been 55? Or, well, who knows? I think maybe I see what you're saying. You're saying that because they're all estimating it to be lower than last time, the scenario where it is higher and the market really gets pummeled because the number is so high is a lot less likely. And so the kind of like the tails favor you taking the long. Well, no, because what I'm saying is that I'm not necessarily looking at the consensus as estimate relative to the last reading. I'm looking at when I say the last reading, I mean like the last PMI, right? Like last month's PMI. I'm looking at the consensus estimate relative to the last piece of economic data, period. And whether the last piece of economic data missed expectations or not. No, well, so if we're saying the same dog, then my explanation of what you said was wrong. Because I said one thing and you were like, oh, that's what I'm saying, but you're told, but no. So like you get these numbers, right? You have the previous and you have the estimate, right? And then we get the actual, right? And in this instance, the previous was 53.8. And the estimate was 52.6. What I thought you were saying is, if the estimate is less than the previous, then bet on it being weak. Bet on this number, this actual being less than the estimate. And if this estimate is higher than the previous, then bet on the actual being higher than the estimate. That's what I thought you were saying. Right? But what I'm saying is, you have all of these numbers. And these are not just PMIs, but like all of the past economic data. Here's the estimates, and here's the actuals, right? And I'm comparing the actuals to the estimates over the last couple of data points and saying, are they consistently beating or missing? So as of late, the actuals have been less than the estimates on all of these numbers in the past month. And so then I say you go short. And I think that there is some degree of just being able to read the overall economic conditions and people's sentiment and stuff in general as well, to kind of know when it's really, really going to miss relative to the estimates and stuff. Yeah, Uzi says yes. I think that's what I'm doing, at least. I think this is a situation where, again, it's like your brain is a machine learning network. It watches these numbers. I'm trying to guess what the number is going to be. And so I just look at it and the situation, and I come up with an estimate, and I don't 100% understand how I'm coming up with that sometimes. But I think that this is a major part of it. Well, now you're confusing me again. The forecasts are going to be forecasts for a reason, right? Why would the consensus be a lower number than the previous? Well, because overall they are expecting the economy is cooling. But like, that's the whole thing is that, okay, so they're expecting it to cool. Why wouldn't the actual come out to be 53? Right? Lower than the previous, but higher than the estimate. Right? But what I'm saying is that they tend to overshoot the estimate. That the actual number tends to be more extreme than what the market thinks. For whatever reason. And that those big misses cluster. Maybe we can prove that they cluster. Yeah, a lot of the work is already done for you in the consensus. Better to panic close a trade because you're wrong rather than fart around waiting for the entire move to finish. I think that, like, when I take a bet like that, you know, I'm right, I maybe make $500. I'm wrong, I maybe lose $500. Right? Like we do, especially with non-farm payrolls. So like non-farm payrolls would be like a much better example because it's been so incredibly random and to predict, right? But I'm expecting a weaker number. So actually, this is actually a really good kind of scenario to draw out. So let's look here on the 5th. So the non-farm employment change, they are looking for 194 versus a previous reading of 272. Okay. Well, yeah, you're right. If I am actually good at predicting the number, then it would be better to get in before the news. Yes. And if I'm actually that good at it, my risk on the other side is maybe limited. Like, if I do lose, I only lose like $100 instead of $500. So I may actually have a really good risk reward as well. Possible. Okay, let's talk about non-farms. So, what was the previous reading here? Oh, the previous was 272. Okay, so the previous was 272. And the market was expecting... I have to pull this up here and like zoom it in and stuff. Yeah, what good is being good at the data points if you're just gonna... Well, but that's not what I'm trying to say. What I'm trying to say is... I've never taken that trade because I think it's a crapshoot. I'm afraid of it. I think that the risk involved in it is too much. And I've gotten this right so many times that maybe I should be taking them. Maybe I can handle the risk of holding a micro contract through the news. Like, you know, it's hard to say because, you know, we only have so many data points and everything. But I have made a couple of pretty decent calls in the past few months, haven't I? And I think in particular, I've been pretty good at catching this kind of shift where all of the sudden the numbers were all really, really weak. And I was like, from the very beginning when they started doing this, being able to call that. I don't know how. Maybe it's just luck of the draw, but it's enough to make me kind of start to think, oh, maybe I can do that. Yeah, I mean, watching a guy never trade for IANS is enough. But watching a guy make consistently good calls and data points and never trading it would just get frustrating. Yeah, it is for sure. Well, and like, so I think, well, so let me finish this scenario and then I'll tell you the other thing that I'm thinking about here. Okay, so it was 175 and they were expecting 238. Okay, they were on this one, they were expecting 238. And, and the previous was 300. Okay, so here on this one, it kind of worked out like that like, oh, they're expecting 300, or they got 300 before, the market was expecting there to be less, and then the actual was way less than that, okay? And then you do the next month, and so both of those kind of heuristics that you could use. Okay, so this time on Friday, they're expecting the actual number to be less. 194 versus 272. Okay. And it's less than the previous. So, so it's less than the previous, and the consensus is less than the previous, right? So both of those heuristics are saying that the non-farms number should be lower, right? But what if we're wrong? What if it comes out and it ends up being 300? Because with non-farms, that's like totally a possibility with the way that number has been going, right? So we're all expecting it to be a little bit light, somewhere around 200,000, and then it ends up being 250 to 300,000 again. That's the way that non-farms has kind of been playing us the last 2 years, right? In that scenario, if I hold through the news, I'm going to get creamed. I mean, I am, right? I'm going to get creamed. Yeah, it would be kind of prudent of you to include those data points in your news indicator if possible. Having previous data releases on the chart would be hella nice. Yeah, so the data source that I pulled things from did not have that information. If you can find a free or relatively cheap data source that will give me that information without me having to web scrape it, which is to say that I can call an endpoint and it will give me like an XML or a JSON document, then I will include it for sure. The fact that that isn't the default on trading platforms really drives home how little brokers want you. I know, right? Well, I mean, Jigsaw has the thing for it, though, right? Jigsaw's got their little economic releases widget. Doesn't put it on the chart, but they got the little widget. Okay, well, there's a little bit of complication in showing it on the chart, as we've kind of shown. One is that you have to actually select which news events are going to be during that day and which ones to show, and drawing them in the right spots, and then possibly moving the chart over so you can see it's coming up. But then also being able to actually display it on the chart so that it doesn't dominate the chart is also a problem. So like, I should be able to look at every non-farms payroll release on my chart going back however far the data allows. Yeah. But how would you want that to be displayed, though? Would be like the real key question. If I was able to get that data, because that's kind of like one of my problems right now. Is okay, so we have ISM services index, and there's going to be a line here where that element was, and there's going to be a title of what the thing was. But then, are you going to show actual or previous expected actual below that as well? Like, that would be super messy, right? maybe it could be if I mouse over it, then it will show me that. That's kind of what I'm thinking, but what would you like? I would say, now you have to say more than just yes, because I gave you different things and I don't know which of those two things you're saying yes to. I would say what you have now, but when you hover over the bar on the chart, it tells you the yes, okay. Yeah, the hover over it. I think I can do it with a hover. Yeah, I think I can. I think I can do it with a hover. And I'm also kind of thinking, hey, let's, you don't need to know at a glance what the news was. You just need to know that there was news. And then when you care, you can mouse over it and we'll tell you. Maybe. What is the data source now? Good question. So it is from, oh man, I don't even remember. Let me pull it up. How much time do we got left? We got 20 minutes. We're okay. Rapid API. So there's this website, this service called Rapid API, and Rapid API, what it actually allows you to do is it allows you to like provide your own API and sell it to people. So this guy, Sam Johnson, has a trading calendar that he has created somehow. And what I did was I queried that calendar, and then I did my own transformations to it to create it into a JSON file that is on your machine, and then the machine grabs it from that, right? So I can modify that file any way that I want. And I could put in, all of the previous numbers into it, for instance. For each one of those objects in there, just include the previous estimate and actual. In order to do that, I would need a data source that gives me that information and allows me to be able to correlate them up with my existing sheet, or is thorough enough that I can just throw the previous sheet out the door, right? But then the issue is, okay, but shouldn't you expect to see that information like right after the news came out, right? Then you would need to be able to call that API, right? So then it would have to be, so if we were really going to go all the way with this, right, it would need to be something where you could sign up for that service and hook it up and get it to give you the numbers. Like I have it with Jigsaw, it kind of gives me that information, or I have it with Financial Juice, but I don't think that either of them have an API that I can access that I would be able to connect the NinjaTrader indicator to, unfortunately. But the on hover thing, I like it. I think I can do it. I will try and do that. Maybe on Friday. I think we could still stream on Friday, but we could work on that. So something that could be incredibly valuable, but also something most retail traders would completely ignore, right? Yeah. Well, I kind of wonder, so I don't know why this has just popped into my mind, but because at first I was like, hey, well, this is kind of related, but now I'm thinking about it, I'm like, this is not related at all, but like the commitment of trader reports and all of that sort of stuff, and I've always kind of been like, well, it's useful, but by the time you get that information, you should kind of already know what it's going to say, right? And NinjaTrader does, yeah, you're right. NinjaTrader does have that as default. But now I'm kind of wondering, what if you tried to include that information in a momentum trading strategy? Could be interesting. Because there are momentum strategies that are like, you take a position based on whether the futures are in the contango versus, I forget what they call the normal situation, but you know what I mean. And there's also momentum strategies that take positions based on the yield curve. So I'm kind of sitting here going like, okay, so like if I have the yield curve up, and I also have, for each of these futures that I'm trading, the term structure of it up, and I also have the commitment of traders up, and I have general rules about how to trade based off of that, and then I put it all into a machine learning model. Well, what kind of a momentum strategy would that give me? Seems interesting. That's kind of like my larger term goal. But I need to get the simple momentum strategy working. I couldn't get it to work. Oh, you want to see the cost basis? Well, I don't think that it's a very good example in here because, well, we were already writing the shorts line, you know, but basically the break even point for shorts pretty much all day, and then this just like really pummeled it through them, right? So I suppose if there was going to be a pushback, I just heard, okay, hold on a second. I just heard something on the news squawk. What was that? I missed one word. It was Biden told an ally he is weighing whether to continue in the race, says the New York Times. That's the story. So I don't know if that actually tells me anything because we already knew he was talking to his family about it and stuff. Oh, okay, whatever. Anyways, well, there's some things that we can do. But basically, I just this little drawing tool that I've got here, I don't think I wrote that one. I could be wrong, but I don't think that I wrote that one. But what I can do is I can extend it, let it give me different properties for the color of the line versus the text of the line. Couple of other things like that, and then make it so that there's a detail, and when you mouse over it shows the detail. And then go through my existing documents that it's pulling the news items from and just change the names of them so that they're shorter, and then see how we like that. And make two versions. One is my news thing. You know, I do. How do you feel? So here's another question. How much do you care about what the price was just before the news release? Because I have that other indicator, like when I go into this this volume profile one right here. You know, like I had an indicator. Well, I'll pull it out here. Drawing tools, events, and I kind of come in here and I say, okay, here was an event, and this was the price when it happens. And so then it draws a line forever going out. And so I'm kind of wondering how much, well, you say it's irrelevant, but is it relevant enough that you're going to want to gunk up your chart with it? Right. I actually kind of don't understand why I have it quite the way that I do. Oops. I don't remember anymore why I set it up that way. There's a certain way that it was supposed to use it, and I didn't. Looks like website FX Street has a calendar API. Historical data. This API version has been, please use the current version. And event, get a historical data of a recurrent event, get upcoming data of a recurrent event, market impact, webhooks, categories. Okay. Can it show me now? Let's try it out. Country, US. Pull this over here. List the category listings within which, okay, I don't know what that means, but let's just, responses, ID, name. Execute. 403. 403 is not authorized, right? I have to do this. Authorize. I have to get a bearer token. Boo. Okay. Oh, it's swag. It's a Swagger page. I was about to say. I was like, is this a Swagger page? Oh, okay. Yes, it is actually. But they do give me in here an example. But then the example, when I do that list, it doesn't give me that information. So then would I have to go and get like, you know, every single event? Event details. Well, even in that, it doesn't have things like the estimate and stuff. So I would have to make like a bunch of follow-up queries and stuff. Upcoming event data. Historical event data. Okay, well. It seems like I could work. It seems workable though. Let me come back over here. APIs. What does that cost? How does it cost? Frequently asked, how do I get my public and private keys? You have to obtain your client credentials. You should get in contact with our sales department. The weight is displayed on your S&P 500 chart gives enough room to see what the price was before the news. Yeah. I really don't like how much it blocks, how dominant it is and how much it blocks, you know, the text will block the chart. That's why I'm thinking, okay, one option that I should have is that it will just print the text horizontally here down at the bottom. And it will only allow it to be so big so that if the title is too long, it will split it into multiple lines. But most of these, I think I can give a much shorter description for it, right? and then you hover over it, and it will give you like the full title of it or something like that. Well, I don't know, Namrus. They definitely have an API and everything, but there is not like any clear like prices in it or anything like that. And ergo, that kind of makes me think that it's probably not affordable. Like if they're not putting the prices up publicly, then it's usually a lot, right? Okay, FinHub, I think I looked at that one. FinHub. Actually, don't I have a spreadsheet here about this stuff? I don't have one. Maybe I have one and I lost it. Okay, well, let's just make a new one. HX data. Data APIs.md. So news, and then we want all past and future news events. We want previous and expected for all events, even historically. And previous, expected, and, then the next thing would be ability to query actual. We're going to learn more about DOM strategy development. So have you watched my order flow video series first? What are you saying here? Put the text in another box below the chart. Oh, wait, are you saying like, make another panel section that's just blank and lists the has the text in that? Yeah, another panel. It's not a terrible idea. Especially if that panel was super tiny, right? But I don't actually think that I even need to do that, because I can change it to resize. So basically what I can do is, like, if this is your default zoom in here, right? I can tell it, when you add this indicator, zoom it in a little bit more to give room for there to be at the bottom of the chart. That would probably be better. Okay, so rapid API gives all past and future events, but not expected actual numbers. But Rapid API is free, so that's good. Okay, so this one right here, then we have FX Street. Seems to have data we need. Price unclear. And then you mentioned, what was the other one? FinHub. FinHub. I think I looked at that one. Pricing. All-in-one fundamental estimates. Wow. I don't think that that's the one that we want. Global economic data. Spelling frequency, quarterly. Global economic data. So, like, the issue with a lot of these is that, like, you know, I would have to set up my own service, essentially, right? Like, I could have my own service that queries their service and then sends the information to you guys, but then that would cost me money to run that service, right? So if it's not a free one, that I can just say, go here and get your own API and put it into this field in the thing, then that part doesn't work, right? Oh, yeah, sorry, I didn't pull over. Okay, so, anyways, I gotta get back to Man Meat. So, that series has basically everything that you need to know about the DOM and kind of like a way to approach things. Now, if you want to get into, like, looking for specific signals within the DOM and all of that sort of stuff, the books that I mentioned in that video series could be really beneficial to you. But you have to understand that, like, especially if you're trying to, like, program for it and test them and everything, it's extremely advanced stuff. So unless you're already a pretty advanced programmer, that would be a difficult road to go down. And I would probably just stick to the framework that I set out in those videos, where you are using the DOM, but you're using it within the context of information that you already know about the market. Right? But if you're a good programmer, then you can try making these robots that try to provide liquidity and do all sorts of funky stuff. Yeah, you can do that. Okay, so, but this one, it says that it has economic data, but it's $50 a month. Thanks for the amazing. Oh, well, thank you so much. I worked really hard on those videos, and I'm glad that people are, you know, when we first posted it, they weren't doing nearly as well as I wanted, but, you know, they really come through. People really, really appreciate them, and so I'm really happy, because it was a lot of work. I'm not a programmer at all. I'm a biologist. You know, let's see. So then what you really need to be doing is just pull up a DOM, watch it every day, be informed, so know what's going on and what flows are coming through and everything, and understanding how to read those flows within that context. And your mind is kind of like a machine learning algorithm, and it will just, you know, over time it will kind of process and put that stuff together in a way that we don't completely understand, and you can get a pretty good feel for the market. This right here should be requirements. Free. I want it to be free, because if it's free, then you can all use it. Otherwise, I have to start providing my own service, and there's problems with that. I'd have to build the business up a lot more to be able to provide those sorts of things to you. Because the way that I'm doing it right now is I'm just giving you a file, right? And that file should have, like, everything into the end of the year, but it's not going to have the actual expected numbers and all that, right? I went going long on FOMC. That one's, so FOMC, you know, we're talking about, I have a pretty good knack for, like, predicting the economic data and where it's going to go, at least as of late. I do not have that for the FOMC meeting minutes. The way that one turns out is seemingly random to me. There's a good chance that it will be dovish, because maybe the Federal Reserve has been looking at this data and saying things are, maybe it was much more dovish than the market realized when the FOMC meeting was happening. But I don't know if there's going to be too much opportunity to trade it today or not. Anyways, I'm just realizing I'm going over, so I got to get going. I will see you guys on Friday. We can continue this. In the meantime, stay excellent, team.